Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the United States have been kicked out of a very exclusive club and what that means to the market. As well as that, I want to talk about more concern that the clock is ticking to sort out some trade deals with the United States' major trading partners. Plus, hands across the water. And what does that mean for the UK and the EU? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So indeed, instead of buy American, at the moment, it looks like sell American. What do I mean by that? I mean, after having a lot of excitement over the last week or so, and with a lot of momentum with the S&P 500 and the US stock market gaining ground again after those losses, it does appear that for now, or at least currently at the moment, we're now back to being negative again. And the reason for that is that the US got downgraded. That's right, because Moody's basically cut US sovereign credit rating down to AA1 from the top rating of AAA. So they're no longer part of the AAA club. Now, again, it's not a massive downgrade, but if you think about it, the United States is the biggest economy in the world. And the fact that their credit rating has been cut to AAA, I mean, to be fair, their rating has already been cut previously by the S&P 500 and by, I've forgotten the name of the other credit rating you can see, which is unfortunate. But Moody's were the last one to do it. And now the reason why they're doing it, or why they've cut it, is they're citing really big concerns over the growing debt and the government's budget deficit, and the fact of the matter is it's still growing. It hasn't been cut down. And of course, this adds a lot more concerns to it as well, with the fact that they're expecting potential unfunded tax cuts by Trump. So again, this is putting a lot of pressure on the US market and US bonds, which we'll talk about in a moment. Now, just out of interest, the only sort of countries which are still part of the AAA club includes Germany, Switzerland, Netherlands, Canada, Singapore, and Australia. And like I say, it was the United States as well on that list, but not anymore. The knock-on effect, of course, is there is concerns in the market, which we'll have a look at in a moment. But as well as that, US Treasury yields has risen to the psychological level of 5%. Now, don't forget, when the yields start to rise, that means, they pay more money out for the money you invest. So they're basically borrowing money. It's like a loan interest rate. So if it's going up, that means there's nervous about that debt being paid back to you. So that's why the yields are going up. So anyway, yeah, there's another thing playing on the market as well. It's not just this today. It's not just this, which is, playing on the market's mind. It's the fact that, except for the UK, which, to be fair, it's a lukewarm deal. Well, it's not totally signed, on the dotted line yet. There is no real signs of any deals coming through from all the other major trading partners with the United States. Now, you don't need to, don't forget okay, that when they put the 90-day delay to reciprocal tariffs on the 9th of April, that 90-day delay is fast approaching. In fact, that expires on the 9th of July. Now, I know we're the 19th of May, okay, and like I say, you know, we've still got June to go, but it takes a long time to organize trade deals. A long time. You know, for one, you've got to get several parties to agree. You've got to have lots of meetings and negotiations. Okay, now the UK trade deal, which happened a week or so ago, don't forget that they were in talks with the UK before that. That was in discussion before this tariff thing. So that had been taking a while anyway. So we are running out of time. Now, Trump did say on Friday that the US will set tariff rates for its trading partners within the next few weeks. But there's no doubt about it. Time is running out. And like I say, 9th of July is when it expires. And like I say, we are running out. And like I say, we really need to see some concrete deals, which we have yet to see. And there was another thing, another worrying thing, a comment that the Treasury Secretary said yesterday. And it was almost a warning, in fact. It was a warning to trading partners. And this is what he basically said. He said that President Trump has put them on notice that if you do not negotiate in good faith, you will rack it back up to your April the 2nd level. In other words, if you do not negotiate, in their opinion, in good faith and in a fair way, then they're going to put these reciprocal tariffs back on you. Okay, so you'll go back to the April the 2nd level, sorry. So again, more warnings, which again, of course, is affecting market sentiment. And there's another thing, not just market sentiment's being affected by this. Consumer sentiment. It was announced on Friday, after my broadcast I did on Friday, it was announced. And it came in the second lowest reading on record. It actually came in at 50.8. The previous reading was 52.2. Now, if you've been watching my programs over the last couple of weeks, the consumer sentiment, and we've covered this a lot, consumer sentiment has been dropping, and dropping. Now, in this survey, you know, because don't forget the Michigan Consumer Sentiment is a survey, when asked what was the main driver or the reason for the lack of confidence, 75% said it was because of tariffs. They are the real driver. So again, sentiment's not just market sentiment is weak today, the consumer sentiment is also weak. And that leads on to another worrying thing. Again, I spoke about this last week. Excuse me, I spoke about this last week. And this is the thing with tariffs, of course, is that prices are going to go up. They are going to go up. There is no hiding from that fact. Again, this is what's affecting consumer sentiment, but this is also what's affecting market sentiment. Prices are going to go up. Now, Walmart last week, when they did their earnings, they had pretty good earnings, but they did warn. Then this is what the CEO said. We can control what we can control. Even at reduced levels, don't forget, China's tariffs dropped down to 30%. Even at reduced levels, the higher tariffs will result in higher prices. There's no getting away from it. Trump, of course, he doesn't like this. He doesn't like when retailers are saying stuff like this, you know, are pointing out to the customers that tariffs are going to affect prices. He does not like that. Not one bit. He had the same issue with Amazon. When Amazon started publishing on their site the tariff related price compared to the original price before the tariff. He doesn't like it. And he's on the warpath again, this time with Walmart. This is what he had to say. This is what he had to say. Walmart should stop trying to blame tariffs as the reason for rising prices throughout the chain. Walmart has made billions of dollars last year and far more than expected. He went on to say this. Between Walmart and China, they should eat the tariffs and not charge valued customers anything. I will be watching, and so will your customers. So again, like I said, Trump does not like one little bit when retailers have come out and started warning customers that prices are going to go up because of tariffs. He does not like it, and he goes on the warpath because of it, like he has done. Amazon was heavily criticized by the Trump administration, and now he's going after Walmart. Let's have a quick look in the market, see how the market's reacted. A, for one, after the US was downgraded. B, as well, because of all these concerns in relation to trade. Hey, hello there. How you doing? Nice to see you. I hope you're doing well. Yes, don't forget, guys, of course, this is a live show. So you can talk to me, say hi to me, whenever you wish. It's a live show. And the other good thing about it is, well, what I like about these live shows, I like to hear your opinions. Let me know what you think as well. So, let me know your thoughts as well. So that's good. But nice to meet you. Hope you're good. Let's have a quick look at the market and see what the implications are after this downgrade. And of course, these trade concerns. Let's have a look. So let's first start off, of course, with the S&P 500, which did open lower with a gap. In pre-market, it was down by a good 1.5%. Since the market's opened, and the market's been open now for nearly 45 minutes, has recovered slightly. I can see it open with the gap there. It has recovered slightly, currently trading negative 0.35%. But again, opened lower. NASDAQ as well on the back of the downgrade and the back of the trade concerns, pretty much same picture as well. Pre-market was down a lot, but has since recovered slightly. But this is the interesting thing. Look at the VIX. Look how the VIX spiked upwards. Again, illustrating the concerns that the market has about not only the downgrade, but all these trade deals. Like I said last week in my broadcast last week, go back and watch the videos if you like, watch the recordings. Like I said last week, I do think the market got ahead of itself last week with the excitement of the deal or the negotiations looking good with China. But we by far not solved the problem yet. So again, I think we're getting ahead of ourselves, and the VIX clearly thinks so too at the moment. Let's look at the Mag 7, see how the Mag 7's opened. Tesla down, negative 2.75%. Meta down, not massively, 0.11%. Microsoft, slightly in the green. Amazon, also in the green. Alphabet, slightly in the green. And Nvidia, also in the red as well. Apple, again, also in the red. But let's look at Walmart. Let's look at Walmart after what Trump says, basically told them to eat the tariffs. Walmart spiked down 1.11% following Trump's comments. Here's a good question. Trump needs to accept that the consumer will be affected by his tariff policies and not act shocked when the consumer complains and companies protect their profit margins. That's a very, 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 very valid point. He does. I think everybody knows that tariffs are going to increase prices, but he keeps his standing and how he stands on it, of course, is that China's going to pay the tariffs or EU's going to pay the tariffs. He says this all the time in his speeches. doesn't he? He says, "Oh, they're going to pay." It's like it's almost like it's make believe. That he keeps telling everybody that they're going to pay. And that's not the customer's going to pay. So when the retailers come out, excuse me, and say, "No, hang on, yeah, we're going to put prices up," and it's the consumer's going to pay, he doesn't like it. So that's why, of course, he then jumps on the retailers for telling the truth. But anyway, that's a great point, Costas. A very, very, very good point. But like I say, yeah, Walmart down 1.08% on the back of Trump, attacking them almost and telling them that they should eat the tariffs. It's their fault. It's not the tariffs' fault. And on another story, nothing else was supposed to develop today, I want to talk about. And that is hands across the water. Because today, the UK and the EU agreed a post-Brexit reset deal. Now, this is obviously going to freak out some, Brexiters, people who wanted to leave the EU, because But anyways, new deal, which was announced today, will make it easier for British food and drink to be imported and exported from the EU. So it's going to be better for obviously British farmers, British, wholesale productions and things like this. As well as that, part of the deal, what the EU gets in return is what they really wanted, what they were after. Okay. It also extends fishing rights of EU trawlers in UK waters to 2038. Okay, obviously that's going to upset some British fishermen, things of this nature, but this is what the UK really wanted. So the EU really wanted, part of the trade deal. And as well as that, what they've also been agreed out of this new trade deal between UK and the EU is that UK defence industry can participate in the EU's proposed new $200 billion defence fund. Don't forget, the EU got together just over a month ago to discuss the situation with defence, increasing spending, because they're well aware they can't necessarily rely on the United States. And obviously there is growing concerns of how unstable Europe is. So they all agreed to obviously increase spending. And obviously UK, who has got one of the biggest armies in Europe, one of the biggest in Europe, EU wants them to be together with them. So this is part of the deal. They've also agreed that the UK defence industry, so you're looking at the likes of British Aerospace, things of this nature, Rolls-Royce, who makes a lot of jet engines and things like that, can be part of this defence fund. So that's going to be quite fascinating to see. And it'd be interesting to see the backlash as well we're going to get from this with all those who wanted to leave the EU. They're not going to be very happy about that at all. Anyway, it's now time for a currency update. Okay, so let's have a currency update. Let's go and have a quick look and see what's happening with the currencies. Of course, at the same time, when I talk about currencies, I'm going to, of course, talk about my favorite, which, of course, is gold. So let's start off with the euro dollar, because like I say, when the US downgrade was announced today, not only did it put pressure on the stock market, it also put pressure on the greenbacks. So we have seen today, obviously, the likes of the euro, who was trading around the 112 level at the beginning, 1-1 level, sorry, at the beginning of the day, is now managed to go above 112 again. British pound, US dollar as well, also done the same thing, was below 133 at the beginning of the session until, of course, news trickled in and news started developing about the US downgrade. Obviously, the sterling as well and the euro, so getting a bit of a boost with this new EU trade deal, as EU UK trade deal as well. Let's have a quick look at the dollar yen. Again, as you can see, the dollar is weakened against the yen today as well. So we are looking a weaker US dollar. We see that as well with the dollar index. Dollar index down just above 100. Currently trading 132. And of course, if we look at the yellow metal as well, currently still, not some exciting moves like we've seen over the last couple of weeks, but still holding around $3,226.82. Like I say, tested that key area of interest, in my opinion, that trend line, before obviously bouncing back. My only concern, like I've already mentioned, okay, of course, is this looks like a double top here. But as we still got this uncertainty and more trade concerns and trade worries, obviously gold is still holding its own. So like I say, gold is currently trading at $3,226. Anyway, don't forget, you can talk to me anytime you wish, or ask me questions, say hi, let me know your opinion, let me know what you think, obviously. That's my favorite bit, is when people let me know what they think, share with me their opinions, their ideas, what they're trading, what they think. That's often the best bit. Anyway, let's go on to something else. What else is happening this week? Because we've got a big week. We have got a big week ahead of us. We have got RBA interest rate decision, Canadian CPI, UK CPI, German manufacturing PMI, EU manufacturing PMI, US manufacturing PMI, and UK retail sales. Not massive barn burner of data, but I think obviously the US manufacturing PMI will be interesting. UK CPI would be interesting too as well, worth keeping an eye on. Like I said, don't forget, this is a live show, so you can talk to me anytime you wish, or ask me questions, say hi, let me know your opinion, what you think, things like this. As well as that, if you're watching me on YouTube and you like this type of content, by all means, subscribe if you like. Hit the notification button, next time I'm going live, which I go live almost every single day. And of course, if you like this sort of content and you've put up with me, you don't mind me, by all means, give me one of these. It's nice to know that you like what we do. As well as that, what I have also noticed, is a lot of people go back, and they do go back and watch the recordings, which is great, because it's, I like any type of support. That's brilliant. That's really, really, really good. But if you are watching the recordings and you then have a question or you have something to say, by all means, put it in the comment section below. I will see the comment, question, or whatever statement, and I will reply to it next time I go live on air, which of course is almost every single day. Okie dokie. If there is no questions, what I will say though, of course, obviously, if you're not part of the OneRoyal family and you're interested in finding out a bit more, if you go and look at the description on YouTube, there's a little link so you can find out a bit more about us. So by all means, come and join the OneRoyal family if you like. Okie dokie. Okie dokie. If there is no questions, not a problem. Not a problem. Leaves me to say then, in that case, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.